It's Tuesday, September 28th, 2021. We were all reminded yet again just how volatile these markets really are. Dow Jones today down 570 points, S&P 500 hammered, markets across the board hammered. What was it? Was it Janet Yellen coming out warning us that we're going to have an economic meltdown? Is it Evergrande in China? Is it the U.S. economy continuing to erode, continuing down this road of a depression? Was it the 10-year bond yield rising at 1.57% at one point today? What was it or what wasn't it? I don't know. Please comment down below. Why did we see this massive correction today in these markets? Was it a variety of things, or was it just one thing? Or is it something we don't even know? Jeremy Grantham, notable investor, was on CNBC and says U.S. stocks are in a magnificent bubble, crazier than 1929 and 2000. I've said this many, many times. A lot of you have said this too. This doesn't remind me of 2008. This really has a resemblance to 1929. This economy right now looks more like 1929 than any other economy in our history. And I do believe it could be much worse than 1929 just based on the amount of debt and deficits that we have today. And the amount of money printing that we have endured. But I think this could be much worse than 1929. But I would definitely say that where we're at today resembles 1929 more than any other period in history. CNBC, Jamie Dimon warns it's possible the Fed could be forced into a sharp move next year. He said the Fed can't always be proactive. I mean, they're going to have to be reactive. I'm no fan of Jamie Dimon, but what he's saying, I think, holds a lot of truth. He said if those hot inflation figures continue into December, then U.S. policymakers may have to admit that at least part of the price increases are here to stay. And as you've said, and as I've said, these prices are going to continue to go up, and get ready to pay more forever, because prices aren't going to ever come down. They really are not. Prices are only going up. And when he says reactive, that means interest rates are going to go up. And I know people were laughing a while back, but people aren't laughing so much now. There is a huge possibility that we're going to see interest rates go up next year. And this is going to have a catastrophic effect on housing, the stock market, the economy, everything. But they're going to have to react to what's going on. I thought, honestly, that if this inflation kept going until September, into September, we would begin to see interest rates going up. I mean, we are seeing the 10-year Treasury yields going up, but we're going to see the Fed come in and raise the Fed funds rate in 2022. I do believe that, and I don't think that that's a joke any longer. Article today, why everybody's hiring but nobody's getting hired. This is very interesting. And there's probably a few different reasons for that, but the main reason is many of the jobs out there are undesirable jobs. Many of the jobs out there are in the service sector. Many of the jobs out there are low-paying, minimum wage jobs with limited hours. It's very hard to find jobs that are going to give you 40 hours a week plus. Hard to find a job that's going to give you benefits. Many of you know, if you're especially in the service sector, you're going to get 18, 20, 25, maybe 30 hours a week. That's it. Many of these jobs, as I said, are in the service sector. Fast food, order takers, cooks, busboys, waiters, waitresses, bartenders, maids, coffee makers, etc. And what's unfortunate is that today, these are careers. People with college degrees now are taking these jobs as careers. They're working maybe 2 of these jobs just to make ends meet. And we're in a time in our history where, people aren't going to the factories. We're not manufacturing anything. We're not making anything. The well-paying jobs, a majority of them have gone overseas. The factories have gone overseas. And now we have this service sector based economy, and this is where the jobs are, servicing people. And people are beginning to realize the importance now of having those manufacturing jobs, having those factory jobs here. And, they're gone. And now people are having to take these service sector jobs as careers. And I see so many older people now too, because they don't have enough money saved up for retirement. They've been forced to go back to work, and they're working at McDonald's or working at Taco Bell. They're 75, years old, maybe even 80 years old. And ask yourself, when this next collapse happens, and it is going to happen, guaranteed, you're going to see a market collapse. And when it happens, people's retirement is going to be wiped out. Their portfolios are going to be wiped out. Their wealth will be wiped out. People who think they're wealthy now because the price of their house doubled in the last couple of years, that's all going to change. And people are going to find out that it was all on paper, that they weren't holding any wealth in their hands. It was all on paper. And these are going to be the same exact people that are going to have to go back to work. And guess what? Guess what type of jobs they're going to have to go to work in? They're going to have to go back into the service sector, and they're going to make minimum wage, or they're going to take a low wage, and they're going to get their 18, 20 hours a week, and that's it. And they're going to have to survive on that because their 401k got wiped out, maybe their pension got wiped out, their retirement fund got wiped out. All the money they had in the stock market gambling got wiped out. And this is going to be the only option. Go work in the service sector, and it's going to be bad. And look, I saw this happen after 2008. People who were, in their mid 60s, mid 70s had to go back to work. And they had a couple $1 million in retirement, and they got absolutely decimated, and they were forced to go back to work, and their lifestyle and their life changed. And what a terrible time for it to happen. When you're young, you can rebound and you can adjust and you can maneuver through things. You're resilient. But when you're, in your mid 60s, 70s, it's not good. Not good. Investors see natural gas crunch spilling into crude market, lifting oil prices. Brent crude today closed at $79.09. U.S. crude closed at $74. Brent crude actually broke $80 at one point. And get ready to pay more at the pump. Oil prices are not going to go down. They are only going to go up. You're going to see oil prices, I think this winter, break $90. The hedge today, t-shirt and jean inflation coming with decade high cotton prices. So after you pay more for gas, after you are paying more for food, more for rent, more for health care, more for basically every daily essential, you're going to pay more now for jeans and t-shirts. Beijing has shut down electricity-intensive factories such as apparel manufacturers to conserve power. All this means consumers could see price increases in the clothing they purchase. And remember, we don't make clothing in America. Maybe maybe True Religion. Maybe I think they make jeans here in America, but you're going to pay $300, $400, $500 for those. But what clothing do we make here in America? You look at a T-shirt. You look at some workout shorts, some board shorts. Everything is made in Asia, and so again, we are so reliant on other countries for pharmaceuticals, for energy, for clothing, for aluminum, for rubber, for cheap goods, for literally everything sitting on a Walmart shelf. We're relying on from Asia, including clothes. And I don't know when America's going to figure it out, but we need to start making things here, or we're going to be in very, very big trouble very, very soon. CNBC today, MasterCard enters buy now, pay later battle with new installment loan program. And I just did a video on this about these buy now, pay later services. Well, now MasterCard has gotten into the mix. They want to keep you spending. They want to keep the American consumer spending. Whether it's a stimulus check, whether it's an unemployment check, whether it's a credit card or a buy now, pay later program, they have to keep you spending. And America, everybody out there watching, if you don't need it, don't buy it. And whatever you do, if you can't afford to pay it in cash right now, don't use a credit card. Don't use one of these buy now, pay later services. Save the money and pay cash for it. Do not take on debt. You know, it's nice. Well, buy now, pay later has no interest, no hidden fees. That's great. But if you don't pay it off in time, you will be penalized. And if you can't afford to buy it today, you shouldn't be buying it, period. That's how I see it. That's how I'm living my life. If I can't afford to buy it right now, I don't buy it. And if you follow that mindset, you'll never get yourself in trouble. And one of the best ways to never get in credit card debt is never ever use a credit card. Yes, if you have to rent a car, you have to stay at a hotel, yeah, you use it. But if you're going to the grocery store with a credit card, if you're buying dinner on a credit card, if you're buying a watch or a piece of jewelry on a credit card, if you're going clothes shopping on a credit card, you are out of your mind. You are out of your mind. Do not do it. The best way to not become a debt slave is not get into debt to begin with. And you know, if you use a credit card or one of these buy now, pay later services, you're going to spend 30 to 50% more money than if you use cash. The hedge, U.S. consumer confidence unexpectedly plunges to 7-month lows as optimism slumps. U.S. consumer confidence has tumbled for the third straight month. What a surprise. When all this free money, the benefit checks, the unemployment checks, the stimulus checks, now it's all drying up. The money is running out, ladies and gentlemen. So what do you think is going to happen to consumer confidence? The money is drying up. Consumers are less optimistic about short-term business conditions, it says right here. Well, of course they are. Take a look at what is happening. You know, just go back to my last two videos and take a look at the vacant office buildings that I recorded. Take a look at the homeless crisis. Take a look at the closed retailers that are never coming back. Take a look at what's going on. There is no optimism here. There is no confidence. People are now beginning to get very, very worried. And there were people who made fun of my videos a year ago that this could never happen to them. The gravy train was never going to end. The checks were never going to stop coming in. They would never ever have to go back to work. The job that they were going to go back to was always going to be there for them. But unfortunately, many of those companies have been closed, never to return. They are deceased. Places that millions of people worked at no longer exist. And now they're having a very hard time finding a job that actually pays a decent wage while they went out and bought a new car, while they stiffed their landlord and didn't pay rent. Now their credit's going to be destroyed. Now they're going to be evicted. I mean, this whole thing is a giant mess, and it's going to come to a head. Bloomberg, U.S. home prices gained 19.7% in another record for hot market. I believe Phoenix actually saw 32%. It's the 14th straight month of accelerating price increases. What could possibly go wrong? Of course there's no housing bubble, right? I mean, Phoenix seeing a 32% increase in home prices, and nationally 19.7% increase. This in July. I don't have the August numbers. This is for July, according to Bloomberg. So what could go wrong? Of course, this is no housing bubble, right? This is just good times. This is going to be such a disaster when these bubbles burst, ladies and gentlemen. We are not even going to be able to put this in words when it happens. We are going to see the worst economic crash in world history, and it's going to happen right here in America. I think America is going to suffer the brunt of it because we are a nation of consumers. Now nobody even wants to work. We are a nation with a GDP that is based 70% on consumption. And you ask yourself, what could possibly go wrong? How long do you think a nation can exist by just consuming, consuming, consuming? I mean, it's like an animal that just can't stop eating and just keeps eating and just keeps eating. Eventually, its stomach will pop and it will just die. And that's exactly what's going to happen here. We have consumed so much, and it's just going to pop. And these markets are going to pop, and it's going to be hell on earth. Owner equivalent rent shock on deck as actual rents surge by most on record. U.S. rents increased by 2.1% from August to September. Apartment List found that 22 cities among the top 100 largest cities, rents have increased by more than 25% since the start of the health crisis. Since March, look at these numbers. Boise, Idaho, since March, rent has increased by 39%. Tampa, Florida, rent has increased by 36%. This is just from March. Spokane, 34%. Henderson, Nevada, 33%. Mesa, Arizona, 32%. Chandler, Arizona, 31%. This is unbelievable. These numbers are frightening. And this is just since March, okay? And when you look at the severity of the problems economically here in America, people that are being evicted, which nobody's talking about now. We hear nothing about evictions. We're hearing nothing about the mortgage forbearance. We're hearing nothing about auto repos. Everything is fine. Let's not talk about it. Let's not be negative. Don't talk about the bad news. Let's ignore it and pretend it doesn't exist. And maybe it'll just go away. Ladies and gentlemen, it's not going to go away. It is not going to go away. And if you're not preparing for this, you're going to be a casualty. That's just plain and simple. Last article here. U.S. federal judges broke the law by hearing cases where they had a financial interest. And people think the system isn't rigged. We had judges, federal judges, in cases involving ExxonMobil, Comcast, Ford Motor, just to name a few, that had influence in these cases, who had financial interest in these cases. The system is rigged, ladies and gentlemen. The banks are rigged. The financial institutions are rigged. The stock market is rigged. And this is why it is so, why I'm so adamant that you are protecting yourselves, because it's rigged. So many people have already gotten out of these markets, and I wonder why. And the big players, the big fish, will be out way before the rest get out. And the small players, the Robin Hooders, the 90%, they're gonna take massive haircuts. They'll lose it all. They'll be wiped out. Yet it'll be amazing when we look back and go, well, you know, this multimillionaire, this billionaire got out a week before, 6 months before, 6 days before. What did they know? How did they know when to get out? But yet 90% didn't know and just got absolutely wiped out at the poker table. So I'm going to leave it there today. We'll see what happens tomorrow. As you know, the volatility we see, the rigging in these markets, the market could be up 700 points tomorrow, right? I mean, the Dow Jones could come back and be up 700 points. Nothing would faze me at this point. The magic tricks are undeniable. And the money printing, the plunge protection team, all of it, they'll use every tool that they can use. But take today again as another reminder, another canary in the coal mine, how quickly things can happen. Most of you know, watching this video, you know personally that something is very wrong, that these markets are rigged, that there's massive volatility, and that these markets are being propped up on stilts, on quicksand by the Fed, okay? And as soon as they have to be reactive, they're very proactive now, but the minute they have to be reactive, it's going to be game over. And if they raise these rates, you're going to see very, very, very big trouble across the board. And there is no doubt that we are going to see real carnage in the housing market. And I feel sorry. Well, maybe I don't feel sorry, but it's too bad for the people who bought, that fed into these frenzies, feeding this bubble. I feel sorry for so many people that believe so many of these real estate agents that told them that they had to buy now, get in now, you're going to be priced out for the rest of your life. That's not what I see. And I remember 2008 vividly. I do believe that we're going to see big sales in real estate, in land, in residential, in commercial. I mean, commercial is already done. But anyways, let me know what you think. Comment down below. Where do you see all this going? What happened today? Is it going to bounce back tomorrow? Are we out of the woods here? Are they going to fix everything in China and everything's going to, be teddy bears, rainbows, and beautiful, fluffy white clouds? I don't know. But sooner or later, something's going to happen that they can't fix, and it's going to come from somewhere. It's going to come from a bank, a financial institution. It's going to come from the housing market. Something is going to give. We're watching the bond market now. We're watching these yields begin to really move, and that's telling us something right there. But something's got to give. There's all this pressure building up in all these bubbles, and one of these bubbles is going to pop. And when it does, they're all going to pop. So let me know what you think. Comment down below. God bless every one of you. Share this video. Give it a thumbs up and make sure that you subscribe. Talk to you soon.